There is a silver lining in all of this SEC mess. In crypto getting hammered left and right by Gary Gensler, there is a silver lining, and that is Bitcoin is unaffected by all of this. Bitcoin is definitely no security. And so even though all the altcoins are going down, Bitcoin holds up relatively well. And we see that the long-term holders of Bitcoin are not going away. They are doing rather the opposite. Now in this video, we are going to look at several charts. We are going to look at how is the market in aggregate doing, how much are they in profit or losses, how much speculation is there currently happening in Bitcoin, what's the long-term adoption, how is that adoption developing for retail, for slightly richer retail, or for the people that have even one Bitcoin, and what's happening to the long-term supply. All of those questions are very important if you consider Bitcoin as a savings vehicle. And that's in the end what it's now mainly been used for. It's not being used for active trading. It's not being used for speculating that much because the volatility isn't as high compared to altcoins. But the data shows, the data on the blockchain shows that it is being used for saving. People buy in, lock it up, and don't move it anymore. And this is in the end what will create again the bottom of this mess, of this bear market. It's always the same. It's first Bitcoin that stabilizes, and only at the end of a bull run, and there's all this media attention because Bitcoin makes the new all-time high, that's when the altcoins outperform. That's when Bitcoin dominance actually goes down. So this is kind of counterintuitive, right? One might think if we bottom out in a bear market and then we come up, that the altcoins should actually outperform. But this is not what we see. So for example, during this time, right, when Bitcoin was at roughly $3,000 and went all the way to $40,000, during this rally, right, more than a 10x Bitcoin dominance went up. So the altcoins in aggregate underperformed Bitcoin, even though Bitcoin went 10x. Very counterintuitive, but this is always how it plays out. The Bitcoin maxis are basically here to save the show. And it's likely going to happen like this one more time. What do we see here? In blue, we see the realized market cap of Bitcoin. So overall, this is first of all a very long-term chart, right? This is a long-term chart of Bitcoin starting in 2010 when Bitcoin was just like $3 or so. And this is a logarithmic scale. So with each of those steps here, we see another 10x. And over the long term, Bitcoin is appreciating. Now what we see is that sometimes the price here in black is below this blue line and sometimes it's above. What does it mean? The blue line seems to be somewhat of an average of this black line, right? It's not as fluctuating as the price. The realized price, so that blue line, shows the price at which Bitcoin on average moved. So when you look at all the coins on chain, you check it at what price did it move last time. When you aggregate this all up, when you average this out, that's the realized price. So it basically shows what's the average that the whole market has bought or sold into. And that's important, right? The current price is just the price where Bitcoin has changed the last time. But there were a lot of trades before that. And the people that, for example, when Bitcoin is rising, that bought beforehand and then the price goes up, these people here are in profit. And so in that case, the realized price would be below the current price. So when you look at the current price relative to realized price, you see how much is the market in aggregate in profit or in losses. And this is important because whenever the price is below the realized price or when the market in aggregate is in losses, then the Bitcoin maxis are going to dollar cost average in heavily, which makes a lot of sense, right? You don't want to be selling an asset that's currently in losses that over the long term appreciates due to tokenomics. Over the very long term, Bitcoin has less inflation than fiat. And so if you don't really need the capital right now, you simply just wait it out. There's a lot of volatility, a lot of fluctuation, but over the long term, things appreciate. And this is also what we can then see in the holding durations. Now, what we see in this chart, that currently we are above the realized price. So it's not as good of a buying opportunity compared to, for example, the FTX collapse, right? So here we had Terra Luna collapsing, then we had FTX collapsing, and over here we had a really nice buying opportunity. Now we are above, but not by much. We are above by roughly 25% or so. But historically, we have been extending from that realized value by way more than that. So whenever we come out of a depression like this, usually Bitcoin tends to trend upwards. Now 25% of a downside isn't probably too bad if you consider how much in general, historically at least, Bitcoin appreciated. Now, what is this orange line here? This looks at the difference of the current price to the realized price. So how much are people in profit? And it adjusts this profit by the current volatility. So let me show you this formula over here. It's the market value to realized value z-score. So it looks at the current price, or the current market cap, minus the realized cap. So what's the market in general currently invested at in terms of reference price, right? So when the market cap is higher and the realized cap, then the market is in profit. And then it divides this by the standard deviation of the market cap, or by how much is the price in general fluctuating. If it fluctuates a lot, then we can be okay. If we currently see more profit, if it's very calm, then even a little bit above the realized price might already be somewhat dangerous. And so this tracks then whenever we might be very heated or whenever we might be very cheap. And currently, in the grand scheme of things, we are still quite cheap. So this is by no means a time where you want to be selling your Bitcoin, even though Bitcoin went up by 70% year to date. In the grand scheme of things, this is not a lot. And we can see this in other measures as well. So this is the realized HODL ratio. So this simply looks at how many short-term versus long-term holders are there currently. When there's a lot of short-term holders, so people that moved their Bitcoin in the last weeks, compared to long-term holders that didn't move it for the last 2 years, then you know the market is heated, right? A lot of short-term speculation. The other way, right? When there's not a lot of short-term speculation, then this is going down, and then you should be buying. And again, this shows a very similar trend. You should be selling when this is in the red. You should be buying when this is in the green. Currently, we are way closer to the green than to the red. And this is then a self-fulfilling prophecy. When everybody is waiting to sell their Bitcoin until we see new all-time highs, then the supply simply dries up. And with dried up supply and somewhat constant demand, because people dollar cost average in, the price over time increases, and this is then what rescues all of the other crypto assets as well. But Bitcoin dominance first increases out of a bear market. It's not the altcoins that make the race. And so I want to share this chart. And this is again a very fundamentally important chart. If you save in a certain asset, so be this maybe a house or maybe the stock market or maybe Bitcoin, you want to make sure that over the long term, the asset is safe, right? You put a lot of eggs in that basket, so to speak. So for Bitcoin, you want to look at how is adoption actually developing? Is the number of wallets increasing? And this is what we see in this chart. So we look here at 3 different cohorts. How many wallets are there that hold at least 1 Bitcoin? How many wallets are there that hold at least 0.1 Bitcoin? And how many wallets are there that hold 0.01 Bitcoin? So this would be roughly $250, $2,500, and $25,000. And this is ever increasing quite rapidly, right? Within 6 years, roughly a doubling of all of those numbers. Why is this so good? It shows that Bitcoin becomes more decentralized. It has more and more support by more people. And this makes the Bitcoin network more robust in the end. You don't necessarily want to put a lot of eggs in the basket that doesn't see any growth anymore. And that is potentially a risk with stocks, for example, or even with property, because globally population tends to rather decline, right? Where now there's a lot of houses that are being built and the population is declining. Is really every house going to appreciate in value? Probably not. We see this already in Japan. You can get houses basically for free. If they're not in the city center, if they're far out, you buy one of those older houses, you don't have to pay much. And this is a trend that's likely going to a certain degree, also move to other countries that have poor demographics, where the population over time is rather shrinking. But the population, so to speak, that currently invests in Bitcoin is increasing, and that is good. And there's a different representation of this in the next 3 charts. So this is simply just a bar chart, but let's look at this in terms of a line. So this is the number of addresses with at least $250 or so, ever increasing. And pretty constantly, right? This only drops during a massive crash. But even the recent crash, right? The recent 70% crash in Bitcoin did not see this drop in number of wallets. Quite interesting, right? Then we look at the number of wallets with at least 0.1 Bitcoin, so $2,500, also ever increasing. And then here with at least 1 Bitcoin. So the number of full coiners, so to speak, it did now just cross 1 million. So even though this is not positive for the price development necessarily in the next week or in the next month, it is very positive for the long term. It does confirm that Bitcoin can be, despite its volatility, a pretty good savings vehicle. Maybe even because of its volatility. Because when you dollar cost average into Bitcoin, you still buy in after it drops 50 or 60%. You continue doing so because the long-term adoption data looks solid, the tokenomics look solid. Then having that volatility is actually great. You can buy up very cheaply. So it's actually better to have volatility in something that recovers in the end than having something that simply just is very stable. You get opportunities that way. Now there's one more chart that's absolutely critical for the long-term robustness of Bitcoin. And that is, are there really more Bitcoin being held by the long-term investors? Or is it actually still just somewhat of a speculative vehicle? And that's this chart over here. Again, the Bitcoin price. This is the HODL wave, or the percent of Bitcoin that have not moved in the last 10 years. This is ever increasing. So this could be the Bitcoin that has simply been lost, right? If you never moved your Bitcoin for 10 years, chances are you don't know your private keys anymore. What about the Bitcoin that hasn't moved for 7 years? Same kind of curve. Ever increasing. Now 20% roughly of Bitcoin haven't moved for the last 7 years. What about the last 5 years? Again, almost monotonically increasing, only a very few blips in between where this goes down. But overall, more and more supply of Bitcoin does not move. People simply just save in Bitcoin. Now, the only time where we actually see real waves in this HODL line is once we add the 3 to 5 years. This is then where we can actually see during parabolic rallies the long-term holders selling. Now, why is this interesting? It's interesting because the higher this line here is, the tighter Bitcoin obviously gets. But then when Bitcoin rises to new crazy heights, then the speculative mania is at full steam. That's then when you definitely want to be selling. Interestingly enough, this time very few of those people sold. This is now again at an all-time high. Whenever this is high, this is positive. Bitcoin isn't as liquid anymore. 40% of all of Bitcoin have not moved in the last 3 years. Those people here are simply just waiting for another parabolic rally. And the rally from 3,000 to 69,000 was not enough for those kinds of people to sell in aggregate. Right? In aggregate, those people still bought. We would have to see something even crazier than a 10x from here for this line to actually go down. Very encouraging, right? You want to have the asset that you save in very strong hands. And this is pretty much as strong as it gets. Despite all of this volatility, these people here are not selling. They are buying, they are holding. They are dollar cost averaging in. So that's basically the light at the end of this tunnel. We have regulatory clarity around Bitcoin to a degree. Bitcoin is not a security and Bitcoin is very solid fundamentally. It is a good savings vehicle. It does fluctuate, but the fluctuations aren't bad. If you save into something, you probably want to be spending that money maybe 10 or 15 years from now, not necessarily tomorrow. And it's the same for property, right? You wouldn't buy a house in order to sell it again 1 month from now. So why are you really interested in the price of Bitcoin 1 month from now? I approach this in the exact same way as any other long-term investment. You want to be buying when it's cheap and you only want to be selling when either the market is really, really heated or when you do need the capital for private reasons. But ideally, you've got enough of a buffer that you can wait for many, many years. The same what you do for stock ETFs, the same what you do for property as well. Please give this a like. It will help the algorithm. It will help spread the word. And of course, if you haven't yet subscribed, feel free to do that as well. Thank you.